Hey everyone, this is Bill, and welcome to the channel. We appreciate you taking time to join us. In this video, we are focusing on stock market investing by looking at a small biotech firm. Now folks, due to several exclusive events, the markets have recently been tumultuous. Reasons remain various, including but not limited to the annual September swoon, the idiocy in Congress, the fact that we are dealing with major supply chain woes, markets reaching new highs seemingly based more upon stimulus rather than foundational support, the potential Evergrande default in China, and of course the antics of China as a player on the world stage by itself. Pick your poison or add others. Investors have had it rough recently. While it should be noted I have investments in companies which have a significant presence in China, ranging from Tesla to Coca-Cola, but I have never invested primarily in a China-based company. I don't trust them or their numbers, so I sit on the sidelines with the likes of NIO and Alibaba. However, I do recognize China and their markets do have a significant impact on our economy, and it does concern me greatly. Therefore, I am paying very close attention from an economic, geopolitical, and stock market perspective. Sick, twisted freak that I am. Now, I am not a financial advisor, and I am not advising you on investment moves. I am simply offering you my perspective and alerting you to some moves that I am making so that you could maybe take those under advisement and see if it might be an avenue of action that you think could potentially benefit you and your portfolio.
So Lair leans into one, and an absolute cannon shot out of the ballpark.
How about a light beer?
Since I am playing long ball, although I am feeling some current pain, I am enjoying some strong buying opportunities. One arena I think may not be impacted as heavily by a potential downdraft is the biotech industry. Advancements to drastically improve our health and cure diseases are right on the doorstep, and this technological wave is a tsunami and unable to be stopped by political actions and influences. Therefore, over the past couple of quarters, I have initiated a dozen or so small positions in emerging biotech firms, which appear to me to have enormous potential. And in today's video, I am going to preview for you one of those investments, which is Cambridge, Massachusetts-based firm Jounce Therapeutics. Jounce Therapeutics notes that they house a collaborative team with a described singular goal and focus in mind, which is to help cancer patients. So let's hear more from Jounce CEO Richard Murray.
Jounce was founded as an immunotherapy company. What we really target our goals at are to look at first-in-class mechanisms, and that means to bring new therapies into kind of new ways of coaxing the immune system to attack the cancer. We want to bring that right immunotherapy to the right patient population and create kind of the maximum benefit for the patients who will respond to that drug.
Jounce Therapeutics is an immunotherapy company dedicated to transforming the treatment of cancer by developing therapies that enable the immune system to attack tumors and provide long-lasting benefits. Through the use of its translational science platform, the company can prioritize targets and identify related biomarkers to match the right therapy to the right patients. Jounce has a lead candidate in JTX-2011, a monoclonal antibody that binds to and activates specific proteins on the surface of certain T cells commonly found in many solid tumors. Folks, this is very exciting. And success in this portion of the playing field can combine with additional avenues of attack to treat and eventually eradicate the horrendous condition of cancer, which indeed does suck. Over on the company website, Jounce states that, quote, by integrating clinical insights into each aspect of the drug development process, Jounce is discovering and developing immunotherapy programs that target multiple immune cell types, end quote. We can see they do have a strong pipeline with 2 programs in phase 2 clinical trials. Impressive. So in terms of the company's specified mission, they have been laying down a solid foundation of performance, a groundwork for wide-ranging future successes. Now, let's check out some of the technicals and find out if they provide confirmation of the positive data that we've learned about. Now, over at Investors Business Daily, they are not very fond of Jounce Therapeutics. The company comes in with a composite rating of 46, which is not good. The earnings per share and the relative strength ratings are not good. However, we do notice the accumulation rating is an A, and that means that money is coming into the stock, so we can take solace there. We do want to note that many of these biotech companies that are young and emerging do not have great numbers and therefore do not show up great in terms of the earnings per share rating, leading to a poor composite rating. In a review of a chart from finviz.com, we note the company previously traded just under $14 earlier this year before falling quite sharply to around $5, where we can then see a tight bottoming out process in formation. Moving over to a chart from tradingview.com, we can see that after the previously mentioned bottoming process, some volume came into the stock, pushing the stock higher. The downtrend here was clearly broken, providing us confirmation the stock now wants to move higher. The range is there for the stock to approach the previous highs from earlier this year, but without a standalone catalyst, there is more work to do. In this weekly chart from tradingview.com, we see the major overall downtrend is in line to converge with the current uptrend. We can project a potential time frame for this to occur, and at that time, should we see the stock break the overall downtrend to the upside with higher volume, we will have strong confirmation of the stronger move higher in the stock. So what are the analysts thinking about Jounce? Over at tipranks.com, the smart score is a below average 4. But analyst ratings indicate a strong buy for the stock. Blogger opinions are bullish, and hedge fund activity has increased, as we noted over with Investors Business Daily's data. And with 3 analysts weighing in, the average price target for Jounce is $12.50, and that represents about a 70% rise from current trading levels. Well, folks, although I don't know what I'm having for lunch tomorrow, I do like what I'm seeing with Jounce Therapeutics stock. I did initiate a small position a couple weeks back and will potentially be adding if price action continues as I suspect it might. Is Jounce a stock that might fit into your portfolio? Drop some comments and let us know. We would appreciate hearing your thoughts. Please feel welcome to follow us on Facebook at Future Breakout when we're not out of jail. And do like our video and subscribe to our page if you enjoy these short stock reviews. Well, folks, thank you so much for watching, and we'll see you next time.